All right, so we're back with another deep dive, and today we're going to be looking at Land's End.
Land's End, yeah.
Recent earnings call for Q4 and full year 2024.
Yeah.
I think there's some really interesting stuff in here. Some stuff that surprised me, to be honest.
Yeah, I think the market reaction was a little bit surprising for sure.
Yeah, we can definitely get into that.
Yeah.
But yeah, let's start off with just like the headline numbers, just the overview.
Yeah, sounds good.
So Land's End, they reported like a slight increase in their gross merchandise value on a like-for-like basis quarterly. But gross profit dollars increased by 3% year over year.
Yeah, that's 6 consecutive quarters of growth for them. That's pretty impressive.
Yeah, that is.
And you know what really fueled that? Their gross margin.
Oh yeah.
They've been seeing improvement there for 8 consecutive quarters now, and they hit 46% in Q4.
Whoa.
That's huge.
Yeah, that's awesome.
Yeah, it is.
And then, we get to the EBITDA. It's jumped up to $44 million. That's a 38% increase year over year.
Yeah.
And then, that positive momentum obviously flows down to the bottom line.
Right.
Their adjusted net income hit $18 million, and then adjusted EPS was 0.57, which is a huge 120% increase year over year.
Absolutely, yes. So, zooming out a little bit, looking at the full fiscal year, they achieved mid-single-digit growth in their GMV with net revenue of $1.36 billion.
Okay.
And that full-year gross margin saw a jump. It improved by 550 basis points to 48%. So we're seeing this trend continue, right? Like what we saw in Q4.
Yeah.
Adjusted EBITDA for the full year was $93 million, 10% increase year over year. And they swung back into profitability.
Wow. With
an adjusted net income of $13 million, 0.40 per share.
That's incredible.
Yeah, it's pretty impressive. And one more thing, to take away from this kind of high-level overview, their inventory management is really improving. So they ended the year with 12% less inventory.
Interesting.
Compared to the previous year.
Okay.
So, this shows they're getting better at forecasting.
Oh, yeah.
And there's less pressure from markdowns.
Gotcha. That makes sense.
Yeah.
So, we've talked about the results, but like, what is actually driving these changes?
Right.
What are they doing?
So let's talk strategy.
Yeah.
Let's dive into what they're actually doing.
Okay.
One of the first things that really pops out is their focus on licensing.
Okay. Yeah, their licensing business.
Yeah, and what's interesting about it is how they're using it. So they're using it to, reach new customers, get into new product categories without having to spend a ton of money on manufacturing and retail.
Yeah, so like it's de-risking kind of their expansion.
Exactly.
Interesting.
Yeah, they're leveraging their brand without, the headaches of operations.
Gotcha.
And they've actually described this strategy as asset light, low risk, and high margin, which I think we're starting to see in their results.
Yeah, absolutely.
So over the past year, just to give you some numbers, their licensing business generated over $150 million in GMV.
Wow.
And their clubs business, which they launched through licensing last year, it's doing really well.
Oh, wow. That's great.
Yeah, it's exceeding expectations, and it's really getting the Land's End brand out there.
Okay.
So it's a shift for them, right? They're not just relying on their own channels anymore. They're partnering.
Okay, that's interesting.
And their future licensing plans are pretty broad.
Oh, yeah. They got home goods launching on Amazon this summer.
Exactly. And
that's not it.
No.
They've got like a ton of other stuff.
Yeah, they're going to be in hosiery, men's underwear, women's intimates, base layers, even travel accessories.
Wow, they're really going for it.
They are, yeah, with new partners launching later this year. But here's the really interesting part.
What's that?
They're planning to offer these licensed products on their own website, too.
Oh, on landsend.com.
Yeah. So it's like they're trying to, maintain that brand presence and control the customer experience.
Okay, yeah, keep everything consistent.
Exactly.
Okay, so another area where they've done a really good job is inventory management.
Yeah, absolutely. That 12% year-over-year reduction, that's big, and it led to a double-digit increase in their inventory turns.
Wow.
Yeah, so they're moving product faster.
That's awesome.
Which is great in this environment.
Yeah.
They're aligning their inventory with demand, and they're giving customers fresh styles more frequently, so less risk of having stuff that doesn't sell.
Yeah, that makes a lot of sense.
And they're also, working on their supply chain, trying to get those costs down and speed up the time it takes to get products to market.
Oh, interesting.
Plus, they said they're keeping an eye on like all those global trade policies. Oh, yeah.
Just to make sure they have a steady supply of goods.
Yeah, that makes sense.
Yeah. So, those operational improvements can really help their bottom line
Yeah, absolutely, for sure.
and let them react to trends faster.
Gotcha. Okay, so let's talk marketing.
Yes.
How are they getting their name out there?
Well, it seems like they're trying some new things, right? They're
Hmm.
keeping their catalog, but they're also going digital
Interesting.
and trying these experiential initiatives.
Okay, so like what kind of stuff?
Well, they've had some really good success reaching younger consumers.
Really?
Yeah, they doubled their Instagram following in the past year.
Wow.
They're almost at 250,000 followers.
Nice.
Yeah, so they're definitely making some headway there.
Okay, yeah, that younger demographic is tough to crack.
Yeah,
Everybody wants to reach them,
for sure.
but it's hard to actually do it.
It is.
And remember that pop-up shop they did in Soho?
Oh, yeah, the tote customization.
Yeah, that was really smart. They got like tens of millions of views using TikTok and Instagram influencers.
It's amazing how much reach you can get
It is.
with the right influencers.
Yeah.
I'm curious, though, like, what do you think was the main draw of that pop-up? Was it the customization aspect, the location, or just the overall experience?
I think it was a mix. The customization is trendy.
Yeah.
People love that personal touch. Plus, Soho's a hot spot.
Right.
Lots of foot traffic. And then the influencers really amplified it all.
Yeah, that makes sense.
It was smart to pick something visual, too,
Yeah, good for TikTok and Instagram.
Exactly.
And the results were great, right?
Yeah. Their tote bag became their top item for attracting new customers that quarter.
Wow.
And those new customers were, on average, 10 years younger than their usual crowd.
That's awesome.
It is, yeah.
So are they going to do more of that kind of stuff?
They are, yeah. They said they're launching a few beach pop-ups this summer, so they're running with that playbook.
That's awesome. I love that. Okay, so another thing that's changing for Land's End is technology.
Oh, yeah. They're definitely embracing technology. Like, they just redesigned both their consumer and B2B websites.
Oh.
Gave them a fresh look, improved the functionality.
And they're rolling out new tools too, right?
Yeah, they've got that Wear It with AI feature.
Yeah, the personalized recommendations.
Exactly. And they're pushing their True Fit sizing tool more. So it's all about making the online shopping experience better.
And they're even thinking about AI for their paid search and SEO.
Which is really smart because AI is becoming a bigger part of how people find things online.
Yeah, that's true.
So if you're not adapting to that, you're going to get left behind.
Yeah, definitely.
Another shift they're making is with their product strategy.
Oh, yeah. What's going on there?
Well, before they were really focused on a few key items, but now they're offering a wider collection in both apparel and home goods.
Interesting.
Yeah, it's more of a full collection approach now.
So less niche and more broad appeal.
Yeah, exactly. They're trying to be more solutions oriented.
Oh, okay. That makes sense.
It's like they gave the example of combining their Wanderweight and Squall lines
Okay.
to create a new waterproof puffer jacket.
Oh, cool.
Yeah, so it's about, meeting customer needs in a more holistic way.
I like that.
And they're also expanding some of their classic products.
Oh, yeah. Like what?
Well, the Tugless one-piece swimsuit,
Okay. Yeah.
it's a classic, but now they're doing bikinis, swim dresses, shorts, all under that Tugless brand.
Smart.
Yeah, so they're using that brand recognition
Yeah.
to appeal to more people.
I like that a lot.
Okay, so let's break down how their different business segments did.
Okay, let's do it.
Their U.S. e-commerce, their sales actually decreased.
Really?
Yeah, but their gross margin in that segment saw a really nice improvement.
Oh, interesting. So why the decrease in sales?
Well, they explain that it's because they're focusing on higher quality sales now
Okay.
and doing less promotions.
So it's like they're intentionally selling less, but making more profit per sale.
Exactly.
Interesting.
Now, their European e-commerce,
Yeah.
that also saw a sales decline, despite a similar improvement in gross margin.
Interesting. So what's going on in Europe?
Well, it sounds like their push towards more premium products didn't really land with European customers.
Do you think that's a brand perception issue, maybe?
Could be, yeah. The way a brand is perceived can be different in different places.
Right.
So maybe European customers have a different idea of what Land's End is.
Yeah, or maybe the competition is just tougher over there,
That's possible too.
especially in that higher end market.
Right. And they're taking it seriously. They brought an international leader from Nike.
Oh, wow. Okay.
Yeah, so it seems like they're really trying to figure out a better strategy for Europe.
Makes sense. Yeah.
Maybe explore some new markets, refresh the brand in places like the UK and Germany.
That sounds promising.
Yeah.
But hey, it's not all doom and gloom.
No, not at all.
Their partnerships with Amazon and Nordstrom did really well.
They did. Yeah, Amazon had record sales during Black Friday and Cyber Monday.
That's huge.
Yeah, their men's Bedford quarter zip sweater was a top seller.
Oh, wow. I've seen that one. It's pretty nice.
Yeah, it is.
And Nordstrom had the highest average order value and average unit retail for Land's End.
Yep, so it shows that Lands' End can reach different types of customers through these partnerships
Yes, that's a good point.
and appeal to those more premium shoppers too.
And their B2B division is doing well too, right?
It is, yeah. They met their revenue and profit goals.
Awesome.
They're also making progress with their uniform sales. They even landed a big new aviation client,
Wow.
and their school uniform business is still showing potential.
Okay, that's good to hear.
Yeah, so that B2B segment, it's like a nice steady stream of revenue.
Makes sense.
And those big uniform contracts can really boost their volume
Yeah, for sure.
and maybe even introduce new customers to the brand.
Yeah, that's a good point.
Okay, so let's dive into those Q4 financials specifically.
Okay.
Their total revenue came in at $442 million, which is a 14% decrease year over year.
Oh, okay.
But remember, last year had an extra week,
Right.
and they also moved their kids and footwear businesses to that licensing model we talked about.
So if you adjust for those things, the decrease is actually smaller.
Yeah, mid-single digits.
Okay.
But their gross profit actually increased by 3% during the quarter thanks to that margin expansion.
Right, right.
They also managed to reduce their SG&A expenses by $15 million,
Wow, how'd they do that?
mostly because of the timing of their digital marketing spend,
Okay.
and they've been really good at controlling costs.
So net income for the quarter was $19 million, or 0.59 per share, and their adjusted net income was $18 million, or 0.57.
That's right.
Okay. And their inventory levels are down to $265 million compared to $302 million the year before.
Yep, so they're definitely more efficient there.
Awesome.
And their balance sheet looks good. Their term loan balance is $247 million. No outstanding borrowings on their ABL.
Okay.
They also bought back $3 million worth of their own shares during the quarter.
Interesting.
So yeah, they're in a pretty strong position financially.
All right. So for the full fiscal year, 2024, their net revenue came in at $1.36 billion. Adjusted EBITDA was $93 million, and adjusted net income was $13 million, or 0.40 per share.
That's right.
Okay. So now let's look ahead to the future.
Okay.
What's their guidance for fiscal year 2025?
Well, for the first quarter, they expect net revenue to be between $260 million and $290 million.
Right.
And they think their GMV will be pretty much flat, maybe with some low single-digit growth.
So not a huge jump in the first quarter?
No, not really, but
right.
they are predicting an adjusted net loss for Q1.
Okay.
But for the full year, they're more optimistic.
Okay, good.
They expect net revenue to be between $1.3 billion and $1.45 billion.
So they're expecting some growth there.
Yeah, and they're projecting GMV growth in the mid to high single digits.
Nice. All right.
And they're expecting to be profitable for the full year with adjusted net income between $15 million and $27 million.
Okay.
That's 0.48 to 0.86 EPS.
So they're feeling good about their profitability.
They are, yeah. And their adjusted EBITDA is projected to be between $95 million and $107 million.
Okay.
They're also planning on spending about $30 million on capital expenditures, and they're factoring in those global tariffs.
Yeah, got to factor those in.
So yeah, overall, their outlook is pretty positive. I think they're building on that momentum we talked about earlier.
Yeah, that makes sense.
And they laid out their strategic priorities for the rest of 2025 and beyond.
Oh, yeah. What are those?
Well, first and foremost, they want to grow their GMV,
Of course.
but they also want to get back to overall revenue growth.
Okay, so kind of a two-pronged approach.
Exactly.
Okay.
And they're really focused on speed to market.
So like getting products out there faster?
Yeah, that helps them control inventory,
Right.
and it's good for their margins.
Gotcha.
They also want to leverage their SG&A expenses through growth and technology, optimize their marketing, and keep expanding that licensing business,
Okay.
which, we've talked about how successful that's been.
Right, yeah, for sure.
And they're really doubling down on that.
Makes sense.
They also want to keep developing solutions-oriented products, grow their uniforms business aggressively and build strong partnerships in online marketplaces.
So it's like they're taking all the things that are working and really leaning into them.
Yeah, exactly. Okay, I like that.
Oh, and one more thing. This is a big one.
Oh, okay. What's that?
They announced that their board is exploring strategic alternatives.
Really?
Yeah, and that could be anything like a sale, a merger, anything that might maximize shareholder value.
Whoa, that's big news. It is, yeah. It suggests that they're open to some pretty big changes.
So they might not even be Land's End anymore.
It's possible, yeah.
Wow, that's crazy.
I think it shows that they're confident in the progress they've made.
Yeah, especially with the licensing and digital stuff.
Exactly. So maybe they feel like the market isn't giving them enough credit for that.
Yeah, or maybe they think there's a better opportunity out there, like a strategic buyer who can really take them to the next level.
That's definitely a possibility.
Okay, so before we wrap up, we got to do our This Is Not Financial Advice segment.
All right, let's get a little outrageous.
Hit me with it.
All right, so thinking about everything we've discussed, Land's End, they're really leaning into licensing. They're killing it on Amazon. And traditional retail is struggling, right?
Yeah.
So here's a thought, an outrageous but plausible trade idea. Go long on a big e-commerce platform,
Okay.
like Amazon, the ones who are benefiting from these partnerships.
Right?
And at the same time, short a traditional department store chain, one that's been slow to adapt, hasn't really embraced digital or licensing.
So the idea is that Land's End success on Amazon will hurt those old school retailers.
Exactly. It's a bet on the future of retail.
I like it. It's bold. It's a little crazy, but hey, this is not financial advice.
Exactly. Just some food for thought.
Right. So that was our deep dive on the Land's End earnings call.
Yeah.
We covered a lot, from margin growth to licensing to marketing to technology.
And don't forget those strategic alternatives.
Oh yeah, that was huge.
Yeah.
So what do you think? What stood out to you? What are you going to be watching going forward?
Yeah. What are your key takeaways?
We encourage you to keep digging into this. There's a lot to unpack here.
Absolutely.
This has been the deep dive, your shortcut to understanding what really matters in earnings.
And as always, remember that trade idea was just for fun.
Definitely not financial advice.
Yep.
Do your own research.
Always.
All right. Thanks for joining us.
Thanks for listening.
We'll see you next time.
See you later.